Uniswap may be standing at the edge of one of the most important moments in its entire history. For years, many people saw Uniswap as just another decentralized exchange. Useful, yes, but limited. Quietly operating in the background while centralized platforms dominated headlines. But that perception is starting to change, and what's unfolding right now could redefine how DeFi is valued, governed, and adopted. Over the past few days, Uniswap has been climbing steadily, not because of hype alone, but because of fundamentals lining up at the same time. Market position is improving, volume is accelerating, and governance decisions are approaching that could permanently alter the token's supply dynamics. Uniswap has already been moving past competing protocols in market rankings, threatening to break into higher tiers where only the most systemically important assets operate. That matters, because attention follows ranking, and liquidity follows attention. But the real story begins with governance. A historic vote is underway, and if it passes, it triggers a sequence that has been years in the making. After a short time lock period, a massive amount of Uniswap tokens, around 100 million, would begin to be burned. Not dumped, not redistributed, permanently removed from circulation. This isn't an overnight event. The burn would unfold over time as protocol switches flip and fee mechanisms activate across multiple versions of the platform. Mainnet activity, along with Uniswap's own chain fees, would begin feeding directly into this deflationary process. At the same time, Uniswap Labs would formally align itself with Uniswap governance through a binding contractual structure. What makes this especially significant is that the agreement would be recognized under Wyoming's decentralized legal framework, meaning governance decisions would carry enforceable legal weight. This is a turning point. Decentralized protocols have always struggled with one question: how do you convert usage into value in a way institutions can understand? Uniswap may finally have an answer. On-chain data already shows what's happening beneath the surface. Daily average trading volume has been rising sharply. Cumulative volume across all chains has now crossed $4 trillion, with Ethereum leading by a wide margin. When you look at transaction activity on Ethereum itself, Uniswap consistently ranks near the very top. In terms of fees paid, it often sits at number 1, outpacing nearly every other application on the network. That matters because fees represent real economic activity. For a long time, critics argued that DeFi tokens couldn't be valued like traditional businesses. There was no clean model, no earnings, no predictable cash flows. That argument is collapsing. For the first time, Uniswap fits into a framework that traditional analysts actually recognize. Revenue-based metrics, user-driven activity, verifiable real-time economic data recorded directly on-chain. If you handed this data to a traditional financial analyst, they could produce a valuation model that actually makes sense, and that changes everything. When analysts can model something, institutions can invest in it. This is why pressure is starting to build across the entire DeFi sector. Once one protocol proves that decentralized finance can generate measurable, defensible value, others are forced to follow. That's how new bull markets are born. Many believe this sets the stage for what could be described as DeFi Summer 2.0. The first DeFi Summer happened years ago when airdrops and liquidity incentives triggered explosive growth across Ethereum. That wave reshaped crypto forever, but it was chaotic, experimental, and largely speculative. What's forming now looks different. This time, it's driven by revenue, governance clarity, and institutional compatibility. When you project potential valuation multiples onto Uniswap based on these fundamentals, the numbers become difficult to ignore. Even conservative scenarios place it significantly higher than where it has traded for long periods of time. But the real edge comes from efficiency. Compared to centralized exchanges, Uniswap operates with a tiny workforce. Yet its volume per employee dwarfs that of major platforms. This is the power of protocol-based systems. Code scales better than companies. And this efficiency advantage becomes even more important as on-ramps and off-ramps evolve. Traditional banks, payment networks, and fintech platforms are slowly integrating with decentralized infrastructure. As this continues, the need for centralized exchanges begins to shrink. Why route through multiple intermediaries when liquidity, pricing, and execution can happen directly on-chain? Wallet integrations are already accelerating. Software wallets, hardware wallets, cross-platform access is becoming seamless, and once users experience that level of control and cost efficiency, it becomes hard to go back. Fee comparisons tell the same story. Across major platforms, Uniswap remains one of the most competitive options available. Lower friction, deeper liquidity, greater transparency. At the same time, total value locked continues to favor Uniswap over rising competitors. Even when large centralized players attempt to push alternative protocols, liquidity tends to gravitate back to where trust, depth, and distribution already exist. Liquidity is gravity, and Uniswap has it. What makes this even more compelling is what's coming next. Major ecosystems are beginning to converge. Assets from networks like Cardano, XRP, and Solana are moving toward deeper integration. Interoperability solutions are unlocking liquidity across chains that were once isolated. Some argue that newer platforms will move faster. Others emphasize privacy or specialization. But speed alone doesn't win markets. Distribution does. And Uniswap's distribution is unmatched. When large asset managers and index providers begin evaluating DeFi exposure, they won't choose obscure platforms. They'll choose the largest, most liquid, most battle-tested protocol available. That points to one direction. This also intersects with regulatory clarity. As legal frameworks around decentralized finance become more defined, compliant protocols with strong governance stand to benefit the most. If clarity accelerates adoption, Uniswap could be one of the biggest winners. History offers a useful comparison. During the first DeFi wave, Uniswap's airdrop ignited massive interest across Ethereum. Prices exploded, activity surged, and an entire generation of users entered DeFi for the first time. Today, Uniswap has been deeply undervalued for long stretches, trading below levels that reflect its actual usage and importance. But recently, that's started to change. In just days, price action has shown strong momentum. Significant percentage gains have returned. Confidence is rebuilding. This doesn't guarantee any specific outcome. Nothing ever does. But when governance alignment, token burns, rising volume, institutional compatibility, and ecosystem expansion all converge at once, it creates a rare window. A window where something long overlooked suddenly becomes obvious. Uniswap may no longer be just a decentralized exchange. It may be transforming into core financial infrastructure. And when infrastructure finally gets priced like infrastructure, markets tend to move fast. Very fast. Please like and subscribe to Express Econ Geo Finance Insights, and comment below with your thoughts.